panel. I think the particular aspect of Tim's comments that I'll elaborate on, as Tim said, we worked together for the last year or so, so a lot of our thinking is, I think, aligned. I think I'll elaborate a little bit on some of the privacy issues because I've done some specific work on that. But before I do, I wanted to give my own sort of reset of this topic. And when I think about this issue of whether or not central banks should issue CBDC, how they should do this in relation to private initiatives, and I've worked on this area for quite a while, I think in terms of two issues. First of all, what's the mandate of the central bank? And has that mandate changed? You know, have new developments in money, new developments in the payment landscape, bank digital currency and so when I think about, maybe in the US context, the Federal Reserve was founded in 1913, basically to safeguard banks in the event of panics, basically the lender of last resort function. And those activities since expanded to include smooth operation of the banking system, of the economic system. But essentially, the central bank was founded to be the bank of the banks. And so under that role, there's this question as to how far its responsibilities extend. One of the things that banks, or central banks, are certainly responsible for are payments. But in terms of that responsibility, there was a white paper that the Fed put out in 1990, which dictated that essentially the responsibility regards to safety, efficiency, and access. And in fulfilling that mandate, the central bank can play different roles. It can be the operator, or it can be the supervisor and the regulator. And so when we think again when I think about central bank digital currency initiatives, I frame that in terms of should we be the operator, or should we be the supervisor / regulator? And another way to think about that is, should we play a primary role, or should we play a supportive role? And then if we think in terms of a supportive role, I think in terms of who should we be supporting? And this is where I get to this idea of changes in the payment landscape. So there was a very excellent paper by Brunemeyer, James, and Landau that talks about this idea of digital currencies, but it talks about this idea of this inversion of the industrial organization of the financial system. And it's getting at this idea, at least in the context of payments. Are banks still playing the same role, or has this role been replaced by essentially the big techs? So essentially what we're thinking about here is that there's been this decoupling of the three functions of money: store of value, unit account, and medium of exchange. And that what a lot of these platform providers are doing they are picking up on the medium of exchange function, which I think is kind of interesting because it still preserves important functions of central bank activity, which is maintaining the unit of account, the store of value function through the integrity of the central bank operations and the faith that this instills in the system and in the underlying monetary unit. But they're able to leverage this to create services in the function of the medium of exchange. And so if we look at the landscape now, we see that the players in that space are quite different. The Libra proposal would be an example of this. In fact, these things are integrated highly with social media platforms and others. And if this is the future, then I actually wonder whether or not we even can, central banks can play a role in this market, because we're just not in that business. So I think we even can, central banks can play a role in this market, because we're just not in that business. So I think not in that business. So I think because we're just not in that business. So I think that raises some questions, both in terms of what we should do, what can we do, and I think that ultimately we have to see how that plays out. But I tend to lean a lot towards the idea that the closest thing to the mandate, which hasn't really changed with the change of the landscape, it's just that how we implement that mandate has changed, is that I tend to think that perhaps we should be primarily thinking in terms of a supportive role, Having said that, I'll tie this back to privacy. And this is one of the last issues that Tim brought up. Now, privacy is a difficult one. So Christine Lagarde, when she was still the head of the IMF, made this interesting comment. She said that when it comes to providing central bank digital currency, the central banks can do one thing the private sector cannot, and that's provide privacy. Now, of course, what she means is that, I mean, not privacy from the central bank, but who would want that? It's privacy from commercial enterprises. And I think the best way to phrase that is that central banks don't have a profit incentive to do anything with your data. So the central bank can protect your data. And then the question becomes, well, why does the central bank need to do that? So as economists, when we think about intervention of any type, central bank intervention, government intervention, I come back to the issue, well, there has to be some sort of market failure. And so people can take actions to protect their privacy. So why isn't there just a natural market outcome where people adequately protect their privacy? And so one of the pieces of work that I did while I was at the Bank of Canada with Martin Van Oort was we thought about this problem and we recognized that there's an externality. The way data works and the way big data analysis works is that they can figure out a lot of things from data. And one of the things that they can do is they can figure out similarities between you and me. And so if I'm making a purchase and I decide to share my private data, that may give the firm some advantage, say, in terms of price discriminating against me in the future, but it also gives that firm an advantage in price discriminating against you, because that firm can use big data analysis to figure out similarities between us. So the idea is that I don't bear the full cost, the full social cost of failing to protect my data. So there's a market failure there, and that's a potential reason why the government might want to be involved in providing an option for preserving privacy. Interestingly, we can think about this by flipping it around, and we can imagine the idea that privacy is when firms collect privacy, they're doing so not for evil, to price discriminate, but they're doing it for good. That is, that with this data, they can do analysis, figure out what consumers want, and provide goods that are more suited to their needs. And so on this front, I've been doing work with Michael Lee from the Federal Reserve Bank of New York. And what we point out in this context is that sounds good and that's true. But again, there's a potential problem here, which is that the collection of data typically allows firms to produce the best products, but it also leads to market concentration. And so we get large firms that have market power. So the idea that I'm concerned about here is that the firms can use the data to make better products. These better products generate surplus, but the firms get all the surplus. So one of the things that a central bank digital currency can do is essentially give consumers a threat point that allows them to capture some of that surplus, essentially monetize their own data. And interestingly, this central bank currency doesn't even have to be used that much just to provide the threat point, much in the same way that the overnight reverse repo provides a threat point in the federal funds market. It doesn't have to be fully utilized in order for it to have an influence on the rates that lenders can demand from borrowers. So I think those are my two statements with regard to privacy, and at that point I'll hand over to another one of the panel members.
Next we have Professor Park.
Well, thank you, and thank you for having me on this panel. My view is this: I'm of course very pleased to hear that the Bank of Canada is now at the contingency planning stage and no longer at the let's see what happens to the world type of stage. At the contingency planning stage and no longer at the let's see what happens to the world type of stage. At the contingency planning stage and no longer at the let's see what happens to the world type of stage. I wish we were a little longer and further along with this. And the reason why I think we should be further along is there is more to it than, I think we have to have a little bit of a forward-looking perspective on this one. And so we had yesterday Martin from the Peterson Institute basically finished his panel with saying, look, China is here, WeChat is coming, and it's coming for you, so you better prepare. Without having a dystopian view, I think you'd have to take a bigger picture view here. And there are a lot of opportunities in the digital economy, and they require modern digital payment mechanisms, and digital money is one form of that is absolutely critical for it. I mean, one of the things of the internet that made it difficult to have commerce is you need to actually go through a third-party provider, you need to go through credit card companies, and so on and so forth, and that makes it expensive. So payments alone, as a payment system in Canada, I can say, accounts for about $16 billion a year. This is not a lot for the US, I understand, but it's quite a lot for Canadians. For payments, just digital payments that you have currently, you pay 2 to 3%. I think Square, who was here yesterday, they charge something like 2.6% for each transaction. That is a lot of money. Imagine you would go out, the US government goes out and adds a VAT, so value added tax, to every service of 2.6%. People would be out on the street protesting it. Right? So this is enormous tax. This is a huge friction that we have on the system. And this does not allow a lot of digital forms of commerce that would otherwise be possible. Say Internet of Things. You want to have micropayments on the amount less than a cent for transactions. That's not possible, I think, with the current system. Now, why is this important? For the competitive standing of an economy like Canada or the US, we are exporters of financial services, both countries, as I understand it, and exporters of services. If China, which wants to build a digital currency, a central bank digital currency, is getting faster with this and better with this, and India is getting faster and better with this, and India is already far ahead on that one too, then at some point they will develop the services that currently are provided and initiated and ideated here in Canada and, well, not here in Canada, but in the US and in Canada. So what I'm saying with this is, on the one area where we have a huge competitive advantage, we may fall behind. And I think this is a huge threat point. And I think this is where I would like to see that central banks actually take a more proactive role. And proactive not in the sense of you don't have to develop your own network where everything works. I know that this is kind of the thinking that we have. What I would like to see is that central banks, like the Fed or the Bank of Canada, actually become creative and say, look, take blockchains as they are. We know they're clunky. We know they don't have the ability to just have the transaction rate that we need in order to have to service even the payment system. It's not possible simply with the technology that exists. But issue some money there, and you can do that. We can do this right now, right? I can take my laptop out and we can issue $1 billion on that one. And then let's see where this goes. Let's see what business opportunities people, envision and what they develop with this. And just take a risk there and, just see what people are coming up with and what is being developed. So what I'm trying to say here with this is you just can't cover every angle and be absolutely secure that your digital money is not used by criminals and so on. I mean, cash is used by criminals too, right? And we still issue cash. So just take the risk and, do some small experiments. And I don't mean experiments with the banks. I actually mean experiments where real people can do the real things and see what happens. Because we cannot envision everything that people cannot come up yet. So, thank you.
Okay, Professor Werbach.
Thank you. Well, I'll try and be brief so we can get to the discussion. And I'm going to pick up on what Andreas was saying. I come at this as a technology scholar more than as someone whose roots are in banking and financial regulation. I think Rod is absolutely right to say that central banks need to start from what their mandate is. But if we can abstract back from that to think from a public policy perspective, what should the mandates be? I think it's instructive to say, hypothetically, what if we were all Alexander Hamilton now, that central banking didn't exist in its current form? How would we create it today? Would we create a system today that is not fully digital, that involves using these paper banknotes and all the existing kinds of payment intermediaries that we have and so forth? And I'm hard-pressed to think about why we would. Certainly we can talk about the value proposition of the banknotes and so forth, but all of that sounds a lot like the argument that I heard back in the early days of the internet when I was doing internet policy at the Federal Communications Commission. Well, Amazon.com is not going to take off. Why would you buy a book online and forfeit the opportunity to go into a bookstore and flip through the pages and browse around and so forth? And that was all true. There's an experience that you could get going into a bookstore that you don't get online. But as we all know, even though the physical bookstores haven't gone away, the digital experience is so much better and more convenient and more valuable in terms of what the provider can do with the data that it has taken off, and not just in books, of course, in all these other areas. So it seems to me fairly obvious that at some point in time, money is going to be digital, and that point is not necessarily that far off. And then the question is, what's the role of public authorities? And it seems, again, fairly obvious that there is a public good value in money, in having some sort of financial primitive of something equivalent to a fiat currency that's then a foundation for private activity on top. And so, therefore, there still has to be a role for central banks. There's value in terms of what Tim and the other panelists have talked about in central banks exercising that role. But then we have to start with the assumption that we need to move forward with some kind of system that digitizes. And I think that forces us to look at this series of practical questions and figure out how to address them. So we've heard some discussion already in the panel about privacy. And there is a clearly important challenge in providing for the privacy value and the anonymity value that cash provides, while at the same time providing for protection against financial crime and money laundering and so forth. And this is not a fundamental paradox. This is a technical problem. And while I would agree with everyone that's on the panel and probably most of you, at a conference like this, Bitcoin is not going to suddenly take over and be the money that crowds out everything. When we talk about blockchain and cryptocurrencies, it's a spectrum of different technologies. It's a family of technologies, and there's a great deal of work going on with modern cryptography, with zero-knowledge proofs and multi-party computation systems to create systems, for example, that can be anonymous, but only to a degree. So if my query is, does someone have $200,000 in liquid assets to be the basis for a loan, I can answer that query without getting access to all their financial records. And these systems are emergent, and there are all sorts of practical questions, but it's a tractable problem if we sit down and try to address it. So I would agree with what Andreas was saying as well. We need to start doing experiments. Similarly, financial inclusion. One of the interesting value propositions of something like Libra is to provide access to the financial system to those who don't have bank accounts. That's something that could conceivably be a feature of a system, if the central bank is involved, to provide some additional financial access. Now, maybe that's not a central bank itself providing an account-based system. Maybe there's some sort of new kind of public option narrow bank entity that's added into the system. But again, once we start with the question of how do we design a system and spec it out to solve that problem, then possibilities open up. And the final one I'll mention briefly is the cross-border issue. Obviously, one of the limitations of any fiat currency is it's issued by a sovereign state. So that creates two kinds of issues. One is the issue that Mark Carney talked about in his Jackson Hole speech that probably you're familiar with, in terms of the dominant power of the US dollar. But another one is the issue for any kind of cross-border transaction where there's so much delay and expense going through the correspondent banking system. We start to think about a world where central banks are, by default, creating digital currency. How to create systems, maybe they are Libra-like systems that have a basket of assets, like a super special drawing rights system. Maybe there's something else. But again, that becomes a defined problem where we can start to drill down on what are the technical means of solving it. So, it's certainly right, and the Bank of Canada deserves a lot of credit for being really early on to see and to start to analyze this problem. But I think we're far enough along now that while it's appropriate to say this is not a cause for panic, this is not going to happen overnight, if we can agree that this is the end point, then we really need to start drilling down on what are the questions that need to be answered, and then what are the practical mechanisms of answering them. And again, there's a lot of technology out there and a lot of real-world experimentation that's happening with cryptocurrencies and with mobile money systems like they have in China, that I think we're farther along in being able to answer some of those questions than we may think we are.
See if I can do this. So that's an excellent start to the conversation. And what I think is interesting is You go across the panel today, and we have at least a willingness to do contingency planning. We have at least 2 people who are saying we need to start running experiments. We have, I think, everybody who would say we probably want to be supportive of experiments, even if the central bank is not the one doing the experiments. And I'm not sure we would have said that 2 years ago. So that said, I'd like to try to pin the panel down a little more precisely on whether those experiments should be conducted by the central bank, whether that should be done by private entities, and whether we view a central bank digital currency as a complement or a substitute to what might develop in the private market. So anyone can jump in on that.
Yeah, I mean, I think, okay, I think that it's clearly going to require both. I mean, and there's there's already a lot of work going on as Andreas said, in the private sector. Experimenting with different products. We've done some proofs of concept ourselves, including some work on more of a wholesale digital currency, using tokens to do large value transfers, to do tokens to do large value transfers, to do tokens to do large value transfers, to do security settlement, to do cross-border transfers, but we've also done some sort of smaller experiments with particular forms of digital currency that private sector providers have been, or forms of digital currency that private sector providers have been developing, and so we're. I would say that as we're working ahead on this, we're certainly going to increasingly be relying on collaboration with the private sector, because a lot of the expertise and the imagination is really out there. Central banks are institutions that put a lot of value in being trusted, in not doing things that are too wild, in sticking to their mandate. Even to the extent that we are moving forward on this, we're grounding it very solidly in our mandate, but at the same time we need to complement that with the private sector sense of being willing to try things that may not work, and just to get a sense of the range of things that are out there.
So again, I like to hear this. I like the sound of all of this. What I would like to see is the following, and here's also the reason why I think the central banks could have a very important role, because it is a signal when you go out and say, look, here's a little bit of toy money, play with it and see what you can do with it. So just blue sky thinking, go out and go to Ethereum and issue, say, $100 million on Ethereum as a token. You can do that. It's you can put some limits on it. You can try to find technological solutions so that you make sure that there's some form of KYC there. But I think it's technologically possible. At least that's as I understand how it works. And then, basically send it out and say, look, people, now develop products on this and show us that you can actually put it to good use. You can do this then with whatever, pick a few other, say, technologies where you do the same thing. This is, I would say, really low risk because it costs you nothing to do. It costs you a little bit of development and possibly a little bit of a potential backlash if things go wrong, but it could also give you a lot of praise if things go right, and you can show how you are one of the innovative countries and innovative initiatives that you could have. And so try to find a simple solution, not at the biggest possible scale, and don't leave it entirely to, say, stablecoin providers. Because there's a lot in that space which I find is a lot of voodoo economics, and that I am actually significantly concerned about. And I think when you go in, and so also, apart from the fact that you could work with small providers, you can also send a signal to, say, large banks that the world is changing and that they have to prepare. So just in case you don't know, in Canada, we have a long debate about open banking, and I think the way I understand it is our banks would really like this to die. But they wouldn't say it out loud. So I think this is that you can send strong signals saying you guys have to innovate and prepare for the future.
just a note on open banking. I mean, the government is actually, after the consultation process, is actually moving ahead. Although they're deciding not to call it open banking because that has the connotation of anybody can have your data, whereas I think it's going to be called customer-directed banking, meaning that you get to control, the customer gets to control the use of the data.
So I think that's a really good way to phrase it, this idea of thinking about complements or substitutes. And one thing that it makes me think of is that if the central bank was to provide a substitute, issue a central bank digital currency, that would require a change in the Bank Act. And so just that alone tells you that this is something that has to be thought at sort of a fundamental level. And I think it's been mentioned in Sweden and also I think in Canada that this isn't just a central bank decision, this would be a government decision. But I've been leaning more recently towards the substitute role in the sense that I'm not sure we can provide, the complementary role, because I'm not sure we can provide a substitute. Again, if I think in terms of the developments in the payment space and how payments is being so deeply integrated into other aspects of social media platforms and so on, I'm not sure we can compete with this. It's not our business model. Just like being a bank to every individual in the country is not necessarily our business model. And so I think that in some ways, I won't steal any of Gary's thunder, but thinking about what's going on in China, the central bank there is basically trying to provide the liquidity that undermines, or not undermines, that's the opposite of what I was trying to say, that supports payments in the Alipay system. And so these are the types of activities that maybe central banks are best suited for.
Yeah, the private sector is not going to wait. So it's going to continue developing. I mean, Facebook, again, Gary's going to talk about Libra, but there's Libra, and then Facebook just announced another system, Facebook Pay. And if you think that a company like Amazon is not very actively, aggressively working on something in the digital payment space, and a company like Google and so forth, then you're deluding yourselves. There clearly is going to be more private sector activity, whether the central banks are engaged in the process or not. So again, I come back to what I said before. The question becomes, what are the policy criteria? What are the goals and the limits that need to be set? There's experimentation, but there's also a role for definition, for saying that, if there is a system, here are attributes that it needs to have. And then, there still is an irreducible need in terms of being a baseline provider of trust that no private entity can fulfill. There's still that value of central banks. That's the piece that doesn't go away when the system becomes digital. So it's about piecing out how to preserve that role, and then what are the pieces that really are complementary, and providing some guidance to the private sector so that the private sector systems are not these purely voodoo kinds of systems. We're seeing that happen in the blockchain world, in the cryptocurrency world, for example, where the most popular stablecoin is something called Tether, which is an incredibly scammy-seeming kind of solution. It's not at all clear that it is legitimate at all, and yet it's being adopted widely in the cryptocurrency ecosystem because it's there and it works for what people need. I don't want to see that become the dominant kind of system as that market expands, but that's only going to happen if there's not a legitimate public sector alternative.
Okay, we have a few minutes left for this panel, so I will take one question anyway. Sure.
Hi, good morning. This has been a fantastic conversation. I'm Chris Calabria from the Bill and Melinda Gates Foundation, and we're interested in this topic because of the issue that Professor Werbach mentioned, which is, might the digital currencies be more inclusive? If you know the answer to that, please spare us a lot of research money and time. But I do want to ask as well a question. So might the answer to the question of the title of this event be, actually it's going to be a mix of both private and central bank digital currency? So Deputy Governor Lane, you mentioned, for example, that paper banknotes benefit from the backing of a central bank. If you look at the history of paper money, the Hong Kong Monetary Authority issues its notes through 3 commercial banks. the Scottish bank note is issued under contract through three Scottish banks. Might that be the future of digital currency?
Yeah, certainly it might. I mean, I think there are a number of ways this could play out, and sort of what the respective roles of the private and public sectors, I think, is an important part of working on this, and sort of I think related to that, and also drawing in this conversation, the sense of what is the public sector involvement actually bringing to this. What are the sort of the bedrock elements that have to be provided by a public institution, and what are the areas where the private sector can usefully innovate and sort of build on on the foundations that the public sector is providing.
So that was pretty quick. We can do one more question. Yes, over there.
Thank you. Diego Zuluaga from the Cato Institute. My question is on trust and scale. I'm a big fan of Canada. I lived in Montreal for 4 years, but it's a country of 35 million people where 99% of people have bank accounts. If we're looking to expand financial inclusion and increase trust in the system, isn't it private institutions operating in countries with bad public institutions that can provide both the trust and the scale that is lacking? Thank you.
Yeah, I guess certainly it's true that the appeal of some of these digital currencies is greater in countries that don't have a well-functioning existing system. And I think the fact that and a couple of examples, countries when you look at the fact that there's been such amazing progress in digital payments media in China, where in a sense they're leapfrogging a banking system that is not providing for a lot of the basic needs of the public. It's less clear that there's a strong motivation for adopting some of these things in countries that already have well-functioning systems. And in a sense, that's also part of the reason that we're not seeing a digital currency as being something that we're not seeing the case being very strong based on the status quo, but rather we're thinking about the future and how the system could evolve with technology, and therefore what role we would have to play in that context.
So I'm going to just very briefly chime in on this one. So we ran a survey regarding Libra, and we ran it in the US, and we also ran it in Nigeria. And the responses in Nigeria were very, very clear that there was a huge appetite for using this kind of private initiative money. And the appetite in the US was significantly lower for whatever reason. Now, I don't want to, dump on Facebook on this one, but having said that, whenever we asked two questions. We asked them whether or not they would like Facebook money, and half of the population we asked if they want technology company issued money. And the propensity to accept money from Facebook was about 20 percentage points lower than from non-Facebook. So,
which comes down to trust again, and is trust in Facebook. And certainly, yeah, absolutely, on a relative basis, the states that do not have good, well-functioning rule of law and trust, that's where there's more of an opportunity for these systems as substitutes. But on an absolute basis, you look at any of the studies of levels of trust in government and trust in the financial system and trust in the banks, including in countries like this one, it's far, far below what it used to be and trending downward. So again, going forward, this is a reason to think that certainly there's a difference, but that trust problem is not just something we think about happening in non-functioning states.
So I would like to keep the panelists here for another 4 hours, but the clock has run out. Let's